Welcome back, everyone. It is Tuesday, the first trading session for the week. Hope you had a great long 3-day weekend if you had Monday off. My wife did not. She was very salty about that. But welcome back. It's going to be a busy week. It's already been a busy first day of the week on this shortened trading week. But let's jump right in. I have a lot to cover. Let's start with the breadth numbers. So today we had 383 new highs, 20. That's 73% of the distribution, and we had 135 new lows. So almost 3x of new highs. So that's bullish. That's good for breadth on the bull side. Advancing declining, we had 33% of shares green and 62% of shares red. Looking at the 50-day moving average, you had 41% below its 50-day moving average and 35% of shares below its 200-day moving average. A little bit of an expansion. This doesn't really tell the whole story. As you know, I watch breadth as almost like a barometric pressure reading. If I don't want to geek out here, but if you are into weather or if you hike and you have your Apple Watch, and when the barometric pressure drops all of a sudden, but yet it's sunny, that typically will warn you to get cover because it's going to either storm, like rain or hail, or something is up. And usually you'll get that reading before the wind actually picks up. So it's just a barometric reading for me for the markets on the macro level. But looking at just breadth doesn't tell the whole picture, okay? So looking at additional context of today's session. So when even during pre-market, it looked like the Dow and the indices were going to open red. We did. The Dow was the strongest of the bunch at the open. The NASDAQ and the S&P, especially just tech in general, was sold off pretty hard in the early part of the day. I don't want to leave the Russell out. The Russell 2000 was also fairly, I would say, weak at the open. It tried to bounce into the close, but we still closed red for the day. And I'm going to kind of rapid fire later on a lot of those small and mid cap shares, especially in the tech sector, that just kind of got sold off pretty hard today. Looking at the mega cap and the Mag 7, so Google was up 0.3%, but that was really about it. You had Amazon down 1.43%, Tesla down 3%, Apple down 0.41%, Microsoft down 0.3%, Nvidia down 4.35%. You also had a lot of ancillary supporting actors or actresses down as well in the semiconductors. AMD was down 4.7%, Qualcomm down 0.3%. You did have Intel up 2.3% today, which bucked the trend. But you still had companies like CRM, ServiceNow down 1.5%, Uber down 2.3%. A lot of headwinds here. There was obviously big news in the financial consumer credit world with Capital One buying Discover Financial. That may or may not go through with regulatory issues. That is definitely quasi-monopoly or too big to fail. But, this isn't like tech, I think Wall Street has a pretty good grasp on Washington, D.C. I often say and kind of repeat what Bill Kara says about regulatory capture. And you take a look at a lot of the executives just revolving dooring to Wall Street, like Treasury secretaries, Federal Reserve chairs. It's just a revolving door. Excuse me while I take a sip of some adult beverage here. What else? So this morning I reposted, Bill Kara had posted two quick updates on Walmart and Home Depot on earnings. I will go through their charts a little bit later, but he's fairly, I wouldn't say bearish, but knowing him for a while, I would say he's cautious about Home Depot and Walmart. I think the underlying tone that I got from his post was that just be careful because they've run very high on momentum, and we may see a pullback of some degree here. Healthcare, nothing to be too worried about, right? Like Eli Lilly was down 3.38%. So if you got in at the open, yeah, you're down 3.38%. But if you got in a few months ago, a few years ago, a few decades ago, Eli Lilly is still treating you very well. AbbVie's breakout, and I'll cover the chart in the balance areas for the premium members, but they're doing fine overall. But let's keep going here. So what else stood out for me today? It's like a lot to do with SMCI. I'm kind of tired of talking about it, but they were down heavy at the open. They bounced back. They tried to rally back to the close, but after hours, they're down another 4.2%. So if you try to buy that rally during the day, you're already down 4% on that trade. You might as well have just bought Home Depot and lost 4%. What else? So before I dive too deep on this, let's also cover something real quick here on the sectors. So the only sector that was truly green of any measurable amount was consumer defensive, up 1.08%. Pretty much every sector was red. That's not a good look. And if I had you to guess for a steak dinner at Peter Luger's, what was the leading down sector, you probably would have guessed technology, and you're right. After technology was basic materials, consumer cyclical, and then energy, all red. So that's not something to write home about. Another thing that stuck out to me on News Watch was Walgreens, which has been sucking wind, is being replaced this year with Amazon in the Dow. How convenient. At first blush, my first reaction was that's great for the Dow because Amazon will help the Dow because Walgreens is hurting the Dow. 30. There's only 30 names in the Dow, okay? And as a sidetrack, Bill Cara will, he already actually released it, but I'm working with him and his team to get a discount code for the Maverick Investor Handbook, as well as the continued quarterly program. The reason why I'm bringing this up is the Dow 30 is going to be a heavy focus on building wealth for the long term, investing consistently, and long-term trading. I wouldn't say just buy and forget, but buy and manage quality companies that are not going to have massive drawdowns. And that's why I brought this up. But Amazon going into the Dow might help the Dow, but the secondary reaction that I'm having is if Wall Street wants to sell Amazon, and I'm talking like, Goldman, BlackRock, Morgan Stanley, whatever. If they have too many shares to sell, and all these fund managers for 401ks and blah blah blah, how do you quickly sell, right? Without manipulating the markets. You get Amazon into the Dow. That will force passive investors into who buy funds that have now Dow as part of their component strategy for their 401ks. So you're now buying into through pension funds or your 401k or your Roth IRA, Amazon, backdooring purchases of Amazon, and that might be an easy way for the buy side to offload Amazon to passive investors. So that's a secondary thought I had. Maybe it's nothing. Maybe I'm just being paranoid here. But to add Amazon now, here at lifetime highs, you're welcome. Why don't you do it like 3-5 years ago or 10 years ago? You're going to add Amazon now to the Dow? Let me just pause here and catch my breath. All right, let's keep going. So what else stuck out? I'm going to go through the names right now. There was a lot of damage. My strong list and weak list is very skewed to the weak. I'm going to go for strong first because it's a short list. What was strong today? The VIX up 4.83. I have a lot of inverse short like ETFs. I'm not going to go through those. Instacart up 3.43%. Intel up 2.3%. Ally Financial up 1.9%. That's it. I'm going to try to take a deep breath here and go through some of these weak ones. But Palo Alto Networks, by the way, is down 20% after hours. On earnings, they went from 370 to 289. That's a big fall. All right, here we go. What was red? Marathon Digital down 9.02%. These are all percents. DraftKings down 7.29. Roku down 6.6. Lyft down 6.59. Sweetgreen down 6.09. AI down 5.85. Yext down 5.7. ARM Holdings down 5.12, AMD down 4.7, VinFast Autos down 4.5, NVIDIA down 4.35, MongoDB down 4.35, New York Community Bank down 4.29, Kura Sushi down 4.25, Uranium down 4.17, Bitfarms down 4.16, Las Vegas Sands down 3.96, Coinbase down 3.89, Roblox down 3.5, Shop down 3.2, ARK down 3.26, Klaviyo down 3.11, Tesla down 3.1, Wayfair down 2.94, Airbnb down 2.86, Crocs down 2.85, Lam Research LRCX down 2.76, Extreme Networks down 2.63, Rivian Auto down 2.52, Uber down 2.31, Zillow down 2.12, ASML Holding down 2.09, SMCI down 1.96. Now I remember they were down 4.2% after hours. Hovnanian down 1.95 and Disney down 1.94. So you can see there was a lot of red. So what to watch? FOMC minutes come out on Wednesday. This is going to be extremely important but unimportant, meaning that I don't give a F about it, but the rest of the market does, so it's important. They're going to talk about the dot plot. They're going to talk about rate cuts and when to expect them and how many, and every single word is going to be dissected. I almost want to just use the FOMC minutes and plug it into Gemini or ChatGPT and ask them, will the Fed cut this year? And just link the FOMC minutes and see what AI says. And then you have the main event, NVIDIA earnings. The entire world is waiting for this. It's not time to panic, but if NVIDIA shits the bed, it's time to panic because all of the animal spirits, I would say 99% of animal spirits and zero DTE options expiration is in NVIDIA, not Bitcoin and crypto. So this is going to set the tone for whatever happens after NVIDIA earnings tomorrow. So I don't have a position in it, but it's going to be extremely, extremely important. I expect wild swings in the semiconductor index and NVIDIA Tuesday during the regular session into the close because they report after hours. And I will see free members after the Wednesday session. Premium members, please stay on. If you would like to upgrade to premium, the 20% Lunar New Year discount is still open for activation until 5 more days till the end of Lunar New Year, February 24th. I will link that in the show notes, but thank you again for subscribing, and I hope you enjoyed this podcast.